Good morning, I'm David Chaston, standing in for Bernard Hickey with 90 at 9, brought to you in association with the BNZ. Everything you need to know in 90 seconds at 9 o'clock, starting now with news just in that the Fed, the US Fed, has just announced it is keeping its official rates at 0.25%. No surprise there, and that low rates for, quote, an extended period is still their policy. But it was not unanimous. Respected board member Tom Honig again cast a dissenting vote, saying that extended low rates risk accentuating their imbalances and also risk longer-run financial instability. In Europe, Standard & Poor's have backed away from downgrading Greek debt overnight after eurozone ministers moved to adopt a bailout framework, taking the immediate sting out of the Greek crisis and the possibility of raising the stakes when other countries come under budget deficit pressures. In fact, EU officials have warned the UK that it wants to see faster cuts in the British deficit, and they say it matters not that the UK is not in the eurozone. The Brits need to do this because they are in the European Union and have signed up to Brussels policy. Apparently, European Union officials are unconvinced about optimistic British forecasts and say that planned deficit reductions are just not good enough. The land and property tax debate is a worldwide one, and in China, where these proposals are also on the table, public pressure by their real estate industry and big property investors are saying that their new tax will hurt homeowners. Sounds familiar. From the US, there is a growing awareness that the huge amount of high-risk and high-yield corporate debt taken on in the 2006 and 2007 period will come due in 2012. As much as 700 billion of that 5 and 7 year debt, and along with a massive government debt that will also have to be raised in that same year, $2 trillion in the US alone, there are real fears that the overload will mean widespread defaults for these corporates. Moodys is now saying this avalanche of debt raising will be a critical issue if governments and companies don't get out in front of it. And back here, the foreign exchange markets start the day with a rising dollar. The TWR is at 65.2, its highest level in over 2 months, and the Kiwi is trading at 70.8 cents to the US dollar. That was 90 at 9, brought to you in association with the BNZ.